Morning, everyone. I'm Kristen Myers, editor-in-chief of ETF.com, here with your market minute for Monday, May 19th. Now, we have markets broadly in the red today, and that's all due to a downgrade that the United States received in its credit rating from Moody's, one of the big three credit rating agencies. Now, the downgrade went from AAA, which is the highest credit rating possible, to AA1, so AA1. Now, this downgrade from Moody's actually brings the Moody credit rating in line with the credit rating that we see from Standard & Poor's, S&P, and also Fitch. Now, those downgrades happened back in 2011 and also 2023, depending on which credit agency we are talking about. Now, the downgrading credit rating actually means that Treasury bond yields went up to make it more interesting and palatable to investors that feel that they are taking on greater risk to lock up their money in Treasury bonds. So let's actually take a look at some of those Treasury bond ETFs. We have TLT, the iShares 20+ year Treasury bond ETF. It is down almost 1.5% today. Again, as those yields go up, the prices come down. Yields and prices, when it comes to bonds, work in opposite directions. Then we also have Bond, B-O-N-D. That's the PIMCO Active Bond ETF. It is down about 0.5 percentage point right now in trading. But let's take a look on the flip side. We do have at least a short-term duration bond ETFs. So BIL, B-I-L, that's the Spider Bloomberg 1 to 3 month T-bill ETF. It is in the green, but just barely, hovering right now at the flat line. Then we also have SGov. That's the iShares 0 to 3 month Treasury bond ETF. Same situation as we have with BIL. It is in the green, but really hovering around flatline. As again, investors are really, instead of going into U.S. equities right now, are looking more at Treasury bonds, but only at short-term duration. They're not interested in locking up their money for a long period of time because that is too risky of an investment. So instead, they are looking at those short-term duration ETFs and bonds. Now, when we look at the broad markets, let's take a look at SPY. Again, Spider S&P 500 ETF Trust. It is also in the red. As I had mentioned, broad markets are in the red, down about 0.25 percentage point right now. We'll, of course, keep you updated on everything to do with the economy, debt ratings, tariffs, and as always, your investor portfolio. So make sure you subscribe to ETF.com.